Hey, it's Ty Crandall with Credit Suite, and in this short video, I'm going to talk about purchase order financing. By the end of this training, you're going to know what purchase order financing is, how it works, and how you can use it to get money for your business. So let's dive in. So purchase order financing is a way where you can get up to $20,000 to basically get the money you need to fulfill purchase orders so you don't have to use your own cash flow to be able to do so. Now, one of the cool things here is that you're able to get approved, as we'll talk about here in a few minutes, with really bad credit. Your personal credit does not matter at all. It doesn't matter if you have any other kind of collateral. Your revenue doesn't even matter. All that matters is that you have these valid purchase orders. If you have valid purchase orders where somebody has agreed to buy from you, or you need to fulfill purchase orders to get your product actually over the finish line and created, then purchase order financing very well can work for you. So with this, it's perfect for a lot of business owners because lenders aren't really looking at, nor do they require good credit. I mean, you can have late payments, you can have derogatory items, you can have write-offs, you can have collections, and you're still able to get approved with purchase order financing. As a matter of fact, what they care about more is the credit from the actual company that's actually that has the purchase order that needs to be fulfilled than your own. So there's a couple different ways we can look at purchase order financing. First of all, let's look at the fact that you need to fulfill purchase orders. So let's say, for example, that you're a t-shirt embroidering company, right? And you get a big order to embroider these t-shirts, but you have to buy the physical t-shirts in order to embroider them. Well, in this example, you could use PO financing to get the money you need to buy the shirts so you could then have them to embroider them. Now, this would remove a lot of your cash flow constraints because instead of taking money out of your pocket to actually be able to fulfill those purchase orders and buy those shirts, then wait possibly weeks or months to get paid, with this, you're able to get the financing you need to actually get those shirts to embroider them. So it's a simple example of how purchase order financing really works. Now, don't forget, there's two sides to this. So let's say you're on the other side. You have a product. Let's say you are the one that sells the t-shirts and your biggest customers are t-shirt embroidering companies, right? Well, in this example, you can help them understand how PO financing works, lead them to PO financing, and they can order more shirts from you because they can use the lender's money through PO financing to buy those shirts instead of relying on their own cash. So you could be in either one of those situations and you can get an idea of how purchase order financing can really help you. So you're able to typically get approved and funded within about 24 hours. Here's how the process works. The very first time, they're going to want to actually look at the companies that you have the purchase orders with. So, for example, you're the t-shirt or embroidering company, you're ordering shirts from somebody else. Well, the company that does the purchase order financing wants to investigate that somebody else's business credit to make sure that they actually deliver the items if they're paid, right? They don't want you to be in a situation where you come in and pay this t-shirt company a bunch of money for their shirts and then they never ship the shirts. They just take your money. So there's all kinds of ratings and credit scores that are used for this, including SIR ratings or supplier evaluation ratings, where they're rating suppliers and their likelihood of actually staying in business and shipping items after payment. So that's what the funding source is going to want to look at. Is the company that they're actually going to pay for those products reputable and credible? Do they have a history of paying their bills as agreed? Their commercial credit will show them that. Once they've investigated, and which takes up to 2 weeks initially, then those POs can be fulfilled very quickly in about 24 hours time. So there's an initial vetting process, which can take up to 2 weeks. Then after that, you're able to get PO financing in about 24 hours after that those sources have been initially vetted. Now, there's no application fee, and you're able to get funding for as much as 95% of that purchase order. So if you have a $100,000 purchase order to buy those shirts to embroider them, well, you can get $95,000 in financing, which means only $5,000 out of your own pocket in that example would be needed, while the other 95% you're able to get from the actual funding source. Again, you can get approved with really bad credit. The rates are very low on this, about 1 to 4%. Your personal credit doesn't matter. Other collateral outside of the purchase orders doesn't matter, and your cash flow doesn't matter as well. All that really matters is that you have valid purchase orders from a company that has a track history of shipping the items that they say they're going to ship. If you meet that criteria, there's a very good chance you can get approved. So if you'd like to learn more about PO financing, give us a call at 877-600-2487. That's 877-600-2487. We work with a lot of PO funders that can help you get the money you need instead of taking it out of your pocket and it hurting your cash flow. You can also get approved directly online with us at creditsuite.com/getfunding. That's creditsuite.com/getfunding.